You a poker guy at all, Adam?
I haven't played for many years. If there is a gambling event to play, it's usually craps. And
Yeah.
Oh yeah.
uh, I think that's because at least I treat that game like portfolio management.
Yep.
Let's hear what's your strategy?
I mean, I like to. I mean, I'm playing on the come line, obviously, but I like to. Yeah, it's basically back betting. So as you're stacking the
Oh,
chip, you're stacking the chip kind of on top, and your odds become closer to 50-50 because your payouts are a little higher, and it ends up ultimately just being how much money you want on the table.
yeah.
So yeah, I kind of just build into that. It's a momentum trade, and so when somebody's hot, it's just sort of like keep going, keep going. The other thing I enjoy about that game it's like a almost like it's not a I wouldn't call it team sport, but it feels like a community of players at one table, all trying to win
Yeah.
with a die, and whereas like all the other games are like, yeah, it's not, blackjack's like cool that it's cool that somebody else might have won, but like
Yeah,
when somebody
you're all in it
wins
together.
in craps, like the whole table wins.
That's
And
right.
so everyone just like, it ends up being like a high energy table when things are rolling.
Right.
So I enjoy that part too. It's just like
It's a
a,
bit of an emotional roller coaster for everybody, either good or bad,
yeah.
right?
And usually, yeah, the time where, you lose the most money is where like, it's obviously everything's on the table, but it happens after a long run, at least for
That's
me.
right.
So,
Yeah.
yeah, it's pretty
You
fun.
get the one guy in the corner just playing the don't pass
Yeah,
line.
yeah. The don't pass
Yeah.
line, at least, yeah, totally. My experience, that person is standing next to, I can't remember the nomenclature, the guy who's actually managing the chips.
That's right.
So just like sit in the corner, yeah, in the corner, like just putting the don't pass.
Everybody hates on that guy too. It's like, what?
Yeah,
Yeah.
yeah, yeah, yeah. Yep.
We hit
And yeah,
the
and he does something else, and we're like, what?
have you guys seen that crapless craps?
Mm-mm.
No.
It's like newer, but it's becoming more popular. The idea is you could put, instead of just having like 4 to 10, you could put you could put your chips on you could lay them on the 11, 12, 2 and 3.
Oh, okay.
And that's a blast to watch.
Yeah.
And is the payout must be much higher than on those names?
Oh yeah, it's like
Yeah.
if you hit a 2 or 12, it's almost like 6 to 1.
Yeah. Okay. Yeah. I
Wow,
got it.
yeah.
Yeah, it has to be because you're just like right under on that casino.
Right.
So that makes sense. Yeah, that's it's a different game for sure. But
Yeah.
yeah, I enjoy it. I enjoy it.
Cool. And you used to play soccer, yeah?
Yeah, I played a long time ago now, but I played for Duke, and prior to that, I was on the national team when I was 17, and
Nice.
so yeah, there's a kind of long funny story along with my travels with soccer. I was drafted to play after school and played professionally for the Cleveland Force, which is like a minor league indoor team, and then the Columbus Crew, which is the MLS group there, and yeah, it was super fun. I mean, I enjoyed the atmosphere, the team. It was obviously traveling was really fun at age 22, going around the country.
Yep.
um, and people ask me what it was like to play, and I try to describe. I mean, it was a league that was set up in a way that there was the top tier players, which were you typically out of Europe or South America, that the league would pay them to show up because they're trying to sell tickets. Back then, it was a different type of league than it is today, which has progressed a lot. And they
Right.
needed players to just pass the ball to that player, and they would pay guys like me that are U.S. based like as low as they possibly could. So yeah, it ended up being just kind of like a party league. It's just like kids like me coming out of college, just enjoying the travel and like just being part of the whole situation. And so yeah, I had a great time. Met a lot of good friends along the way, and I tried to relate it to a movie which is an '80s movie, but it's called Slapshot. I don't know if you ever heard of that movie, but
Yeah.
it's like about minor league hockey.
Yeah.
And so it kind of felt like some episodes out of Slapshot, or like scenes out of Slapshot. I could like definitely be like, oh, I can relate to that type of thing. So yeah, all good. It was a great time, and I quickly realized I was born in the wrong country to play professional soccer. And so I retired at age 23 or whatever, and started
Yeah.
working on Wall Street, and I still played for a little while, but started to focus on a different type of competitive mind space. So in the trading world, loved playing back then.
So that's a cool transition. So yeah, tell us about the post-soccer career.
Yeah, so I had done an internship at Citigroup on the sales and trading side, and worked at a hedge fund that was an options vol strategy, also internship before finishing my soccer career. And I decided I wanted to be on the buy side, and mostly because I wanted to better understand risk management and the process of managing capital and portfolio construction, et cetera. So I did my best to find a position on the buy side. Ultimately landed at a place called First New York, which is a proprietary trading company. And the unique characteristic of that place was very flat. So I started as an assistant trader working on a depository receipt desk. And I worked for two partners initially, and ultimately the rotation was something like 7 different partners. And they're all former sell-side prop traders, and they were providing liquidity in market making strategies in ADRs, in corporate action trades, some carry trades. And so I learned a lot of the arbitrage trades there. And then moving into just trading after, I think it was like 12 months of training. So they allocated capital to me at the age 23, whatever. It's very small, it's like back then $500,000, $1 million of risk capital, whatever. And so it's just like eat what you kill and provide alpha. And if I was able to do it, then I got more capital. And I was asking for it as things progressed. So I did pretty okay. And then in 2005, I decided to try to look at some of the ETF trades. And that was like a new wrapper, like a new market structure back then. And I was coming from a DR desk, so I don't know how familiar with the depository receipt names, but back then there was a market making strategy or arbitrage strategy between the US listed depository receipts and common stock. So stocks like Sony in Japan listed in Tokyo also had a depository receipt in the US, and there would be an arbitrage between the two time zones. And then in the ETF land, iShares created EWJ, which is a Japanese listed ETF here in the US, meaning all the underliers are stocks that are based in the common stock in Japan. And so I started looking at this, and back then, I think when I looked at it, there was like $80 million of volume traded per day. And that was less than probably half the DRs that were listed. So like Toyota Motors traded $200 million of volume per day. And Sony, et cetera, you can kind of go down the list, all trading more volume than the ETF. So when I started trading it, the partners of the firm were like, yeah, you can. I asked them, I was like, can I trade EWJ? They're like, yeah, you can trade that. It's a fad. Like ETFs are going to die, in a year or two. They'll never grow. Like, go for it. So, 23-year-old, like, do whatever you want.
Take advantage.
So I started trading the ETFs, and of course, the space exploded in 2006, 2007, and I was trading, credit products and commodity products and, vol products. And then there was levered vol products, that were showing up. So the book got pretty large, pretty fast. And I made partner of the firm. I was, one of the, I think it was at the time, youngest partner they've ever had. And it was, like I said, a very flat organization. So I was very fortunate to be in that space at that time. And frankly, learning from partners that were willing to teach me, which on Wall Street, at least back then, was not always an easy, seat to find. So super grateful for the partners there that I worked and learned from, and progressed into the ETF space, and kind of continued. But that was the early journey from post soccer play into Wall Street, and really enjoyed the time and the entrepreneurial spirit in that spot.
Yeah. What was the year around that time that you kind of, just curious? That was
the year that I was working there.
Years as far as when you got into ETFs.
2005 was the first. I might have looked at it. No, it would have been 05, because 04 started to kind of look at things, but I wasn't able to trade until May of 05, so I started to do it then. And the models that I had built and like kind of working off the firm were in DR form. So it's like fair value trading, trying to understand where the right quote unquote right price would be. And so it's just applying fair value modeling to ETFs, which, before obviously AI or anything close to it, was just on Excel. And it was just sort of finger in the air for a little while on beta and what we might think, risk models might produce. And it was before decimalization. So some of these stocks were trading like literally 5 cents wide, up and down.
Yeah. Wild.
So yeah, there was just a big difference from a market structure perspective. But yeah, that was it was a unique time. And of course, 07, when we were kind of getting to the peak or top of the equity markets, where there was a lot of dislocation in that direction. And then of course, obviously the 08 and 09, which was the same or maybe even more volatile dislocation in the reverse direction, coming on down in the financial crisis. And during that time, there was just a lot of opportunity for strategies that I were running, mostly because of the dislocations that kind of volatility creates. And a lot of it is, kind of forced volumes in sales and market structure challenges.
Yeah. Were these systematic strategies, or were you trading manually?
So yeah, nothing was black box that we were doing back then. There was a lot of automation, meaning that we would get market signals and then the trade would go in at a price, and it would be like fair value pricing in the UAP. And this may sound crazy coming out of my mouth, but like back then we were still picking up the phone with turrets and talking to the floor. And the floor would have the biggest order. They'd be like, yeah, we have 100,000 to go. Do you want to clean this up? And I'd be like, yeah, we'll clean it up, maybe. And like hang up the phone. And then they call you back, like, all right, we have 25,000 left. Do you want to clean it up? Like, yes, we'll bid 10 cents lower, and then, so yes, there were some automation in trading, but there was also still very much a manual block trades going on from 2005 to 8 that were up they were going up on the floor. Now the floor's, it's still there, but it looks more like a museum than it does a trading floor, at least from my perspective. And very much automated now, kind of across the board.
Yeah, very cool. I love the stories of the pre kind of everything being electronic. Cool. So take us through the evolution of that. So where'd you go from there, and kind of take us to the evolution of starting Hunting Hill?
Yeah, so I had some good success during the volatility in 8 and 9, and as the ETF space continued to grow, I wanted to grow with it in balance sheet. And yeah, the firm I was working with was, again, very fortunate enough to be there as an entrepreneurial culture. And at the same time, they just didn't have the capacity to grow one person's balance sheet. That just wasn't in their business model. But they did allow for some of the traders to raise outside capital through hedge funds. And so that was the path that I went down. And I was lucky enough to launch Hunting Hill. It was, started in 2010, but we didn't launch the first fund until 2012. And I had I made the decision to continue working as a partner of the firm, and then go and get a full-time MBA at Wharton and try to launch a hedge fund at the same time. And so I had a lot of things going on post-financial crisis in that world. And I ended up launching with friends and family money. It was a market neutral fund, and we still run it. It's our flagship product. And the strategy is a lot of what I was doing back in the days with the prop desk. And I had friends and family capital plus the balance sheet that I was running from the prop desk. So, we continued to run this strategy. It was, it's kind of a mini multi-strat. The fund itself, obviously scale-wise, wasn't in a multi-strat of the sort of large behemoths as you see today, but there were different strategies, some in ETFs, some in DRs, some in index arbitrage, closed-end funds, SPACs, et cetera. And so the progression really kind of to where we are today really started to kick off in 2016, where we were looking at crypto closed-end funds. And I didn't know anything about Bitcoin or Ethereum other than kind of the technology and what it was. I had bought pizza once with it in 2011 with my cousin in Central Park, which is like
Is that you? Was that the
no,
pizza story?
It's not the pizza story, but it is a pizza story. Yeah, buying Bitcoin in Central Park with a USB drive and $100 and like, and then going in. It was actually my cousin proving it out. I was like, I don't really understand what this is. This is 20. It was actually the summer of 2010. And he's like, well, I know what it is, and I'll show you. And I was like, I just don't believe this is real. So it was, yeah, that type of story. Just kind of understanding what was happening. I was, learning by doing, which I enjoy still. So that, yeah, 2016, 17 was the first time we were really involved in the crypto space, trading closed-end funds and ETNs. Part of the strategy they were running is looking at the market structure and dislocations in those types of products. We were involved in the grayscale trade, the GBTC, which is now an ETF, on Bitcoin. But back then it was a closed-end fund trading at a premium to NAV. And in 16, it was like 50%. And in 17, I think it got to like 80, close to 100% premium. And then there was an ETN that was issued by CoinShares out in Sweden with Bitcoin as the underlier, also looking at the dislocation there. And that's how I started with the crypto space. It was very small position. We were looking at 50 basis point size in 17. And by the end of 17, which is a huge run up, it was an 8% position, which, obviously great for P&L, but also when we looked down and we were like, how did this get so big? And it's really volatile and like, we don't know anything about it really. I wanted to kind of trim it and figure out how to reduce, but kind of in the back end of 18, it did it itself. And we made a decent amount of P&L during that time with all the dislocations. And then fast forward today, it's 90% or call it 85% of our strategies are in crypto or crypto related trades.
Wow.
So yeah, really,
I love that. 50 basis points to 85% of the portfolio.
Yeah.
Yeah.
Now
yeah. So that gap between 2010 and 2017, what happened in between there? What was, you had this Bitcoin, what'd you do with it? And then, did you kind of lose interest for the, kind of between years?
Yeah. So during that time, so we kind of go back to 2010, and that story was, I'm sitting in business school, trying to figure out the kind of next steps. I had this vision to launch a fund, which I was doing, through the partnership of my old firm. And yeah, my cousin, who's, he's an investor and, just curious about the financial world, was like, you're looking to innovate, like you should look into crypto, you should look into Bitcoin. And I was like, I just don't understand why. Like, help me understand what use case this is actually going to produce. And he's like, I'll show you. We'll go buy this. That was the process. It's like, I'll show you what this is. We'll go buy it. We'll go use it to buy pizza. And like, this is going to be like in the future of payments. And it may not be in the US, but it's going to be somewhere. So that's where that started. And yeah, I mean, I bought Bitcoin and then bought pizza. So I didn't hold it. And people say, if you would have just held it, you would have made so much money. But I have to say, like, as a trader, if that thing had doubled, I would have sold it and then been really happy. So right. I'd have to go back and look at the price. I don't know what it was, but it was under $1, I think.
Oh, wow. So what was the first, like after that, he showed you what was your first reaction to that? Like, okay, was it an aha moment or like, this is okay for now? Or
So the first challenge I saw was that buying a Bitcoin on a USB drive in a park is not really a practical use case. So I was like, I put my hat on of like risk, and I was like, there's a custody problem. So like, what if I had $100,000 instead of $100? Would I be comfortable with it on a USB drive? Like, I wouldn't be comfortable with that. And how would I transfer it to somebody else? And how would that somebody else actually know what I had is real? So there was just basic things like that, where the trust of the whole ecosystem, I just didn't see how it would kind of play out back then. Obviously, there were visionaries and people really knew what they were looking at and doing. Not only had that idea, but also would try to solve the problem. Be like, yeah, I totally get it. Let's build a custody solution that's institutional that would hold this, Bitcoin in a cold storage wallet so that people can trust that they have it. So certainly they're, sort of the future thinkers and venture capital firms of the world were going down that path. And then, I mean, I don't know, we could tell the story in 2016 when we were looking at the Grayscale investment trust. When we looked at that trust, I had the same challenges even then, which would have been whatever 6 years later. And I looked down. I was like, okay, first of all, Delaware Grantor Trust for an investor, not a great vehicle for investor protections. There's a lot of challenges for any activist or an investor to try to get some rights in that vehicle. So that was like one red flag. But forgetting for that a second, that's just structure of any kind of entity. The way that the Grayscale Investment Trust worked in 16 is that if we invested, let's say $100, and what would happen is that Grayscale would receive the order. They'd ask Genesis, which was the trading entity at the time, the authorized participant for that vehicle, to go buy Bitcoin with the dollars and then deliver the Bitcoin to Grayscale. And the way that Grayscale would take in that Bitcoin is they would hold it in a USB drive, fly to Paris, go to the, what was the custodian at the time? It was not Coinbase. Coinbase bought them. It'll come to me. So a custodian that was based in France, and they had, actually might have been based in Switzerland, but they had a cold storage vault an hour outside of Paris. So the Grayscale guys would fly to Paris, drive to this vault, hand the custodian in a USB drive the Bitcoin, and then they would receive the keys. And I was like, this is not custody.
That's crazy.
There's a lot of trust in that guy too. I mean, is he flying first class? I mean, you got to think there's a nervous USB drive in my pocket the whole time,
Yeah. So, it's wild. So I was like, I guess that, we could see how that works. But there's no way we could do this in large scale. It's just not something that we can. I mean, yes, it's a trust but verify, but there was just no way for us as a fiduciary to get large and something like that.
Yeah, very cool. Definitely some fun stories for back in the day.
Yeah, that's wild.
Talk to us about what you're doing today, Adam. So what are you guys working on at Hunting Hill? Tell us about maybe some of the strategies that you guys are trading or looking at.
Yeah, so there is a lot going on in the crypto space at the moment, and relative to 2016 and 2017, the space is institutional and taking a lot of steps from a risk management perspective, just from a strategy perspective. And, the things that we're focused on continue to be around innovative ideas in crypto. We are, looking for attractive risk reward opportunities. We're entrepreneurial. We like to underwrite complexity premium and manage risk accordingly. And so like the silos, at least, that we focused on are market neutral, which is sitting in our bread and butter. So they're alpha generating strategies, and we're looking for sort of different dislocations within the space, and that's continuing to happen. We have an active long only index product, and we offer that. Actually, it's in the top 25 by market cap, so it's something that's not currently offered in the public space, and it's active. And there's also staking involved, which is unique. And then there's a credit strategy. So in the credit strategy, that space has changed drastically over the years. And so we found a nice pocket with our expertise in they call it risk management experience. Since 2017, we've been in the credit space in crypto. And we found a nice partner in Kraken to produce a strategy that would help us scale. So they're very delineated silos at the moment, and pretty excited about all three, and happy to kind of walk down each path if that makes sense. We do have a strategic venture arm, which does more in the financial services in crypto, but those are kind of one-off deals that we look at and try to find partners that we're interested in filling white spaces that we see just as a kind of user of the space.
Yeah, makes sense. So I guess maybe going down a couple of those paths where we want to go. I mean, from an emerging yield perspective, or would be crypto credit, different things that you see in an institutional framework that you now feel comfortable with. What do you see, and what are you excited about it as we move forward?
Yeah, I mean, I think talking about credit space, the landscape has changed so much. So obviously pre FTX versus post FTX are almost night and day. So pre-FTX, there were a lot of pretty aggressive players in the lending space. There were unsecured loans, which were providing a ton of leverage into the market. And that, I think, was a not the only, but a pretty large factor in the correction that we saw into FTX, and maybe some of the causes of even that bankruptcy in particular. Today's world in credit is just not nearly as levered, and the players are more conservative, they're more institutional, and we're just part of that ecosystem. And so the most conservative version of this trade, which I think is interesting for investors as well as borrowers, is just over collateralized lending, and that is a pretty standardized. The way that we at least traffic is pretty standardized in the private credit space, but just hasn't been applied that well into crypto. And so that's the strategy that we've really been tackling since 2023 in that format. And it's a scalable strategy. I think it's an attractive return for the investor base, and it's a need into the space. It's a demand that's coming from holders of Bitcoin and Ethereum that are looking for stable coin or looking for dollars, and they're willing to borrow those dollars and pay an interest with an over collateralized loan. So it's a kind of niche in the market that we've been trafficking for a long time and find, and I think it's a pretty good strategy at the moment, and on the conservative side of credit.
Talk to us about, in terms of is there any alpha generating strategies in crypto? How have you seen maybe like market neutral strategies evolve over the years? Are they still working? They working as good as they used to?
Yeah, no, it's a good question. I think I think in any alpha style strategy, there's decay, right? There's decay in the strategies, there's decay in alpha. And, part of the joys that I get out of this job is to reinvent and think in kind of an innovative hat on, be entrepreneurial, find new ideas. And so the trades that we did 5 years ago or 10 years ago don't always work today. Sometimes they do. Sometimes they show back up, and it's kind of finding that muscle memory again, learning how to ride a bike again. I'm like, oh, I remember this trade. Wait, the mechanics are what again? So sometimes that happens, but a lot of times, we're innovating, finding new ideas. That's how we got into the crypto space, to be honest. So the answer is it's changed over the years. There's still funding arbitrage that kind of turns on and off, and has over the last 18 months or so. Those trades at the moment are starting to perk back up. We had Bitcoin cross 100,000 again today. So the funding trades start to look a little more interesting. There's the kind of called structured finance, which sometimes sits a little bit into the lending markets, which we're seeing continues to work. And then there's just complexity premium. So there's like new trades that will show up in airdrops or sort of other, almost like it looks like corporate actions in equities applied to crypto. So those to continue to perk up, and what we're trying to apply is our TradFi lens with some discipline, execution, and risk management to underwrite some of their complexity premium. But certainly changes over the years, which, like I said, I enjoy as it comes.
Sure. Yeah. What are your thoughts? Just obviously you came in from a grayscale ETF perspective, or I guess the Trust perspective.
Yeah.
The market now, what do you think about it today, where obviously these new crypto ETFs are coming into place?
Yep.
Others are being filed right now. What are your thoughts there?
Yeah, no, it's a great question. So yes, it's a bit of a TradFi and crypto world colliding over the last, at least in the US, over the last year or so. And long road for Grayscale to eventually get the Bitcoin ETF approved, and obviously a lot of players piling into that space afterwards. Today, the landscape is interesting. Like there's a handful, like you said, pending ETF approvals out there. There's a couple of them like BITW and GDLC, which is the Bitwise 10 and the Grayscale Digital Large Cap Fund that they actually are closed-end funds today. They trade on OTC markets. They're looking to be uplisted or converted into ETFs, potentially, kind of mid this year. It could be Q3. So those are yeah, there's sort of one example of the space continuing to mature and become sort of a little bit more access to the retail investor or those that are trading on exchanges to a broader index or broader market within the space beyond Bitcoin and Ethereum. There's also good or interesting plays or curious, at least I'm curious about some of these copycats of MicroStrategy or strategy that have Solana underliers. There's the 21 Capital, which is like the BTC SPAC that Cantor and SoftBank and put together. So those are just kind of interesting plays in the equity space and public space. Staking is an interesting sort of topic, I guess, within that realm. Is currently in the U.S. not really offered on exchange, and what is the wrapper that could work? This kind of goes back to the depository receipt days. So I started on the depository receipt desk in 2004, and there's a depository receipt company that has crypto as the underlying.
I want to dive into that in a second.
Oh yeah, okay, cool, yeah. So that's like another kind of tied into the ETF. It's just a different wrapper.
Yeah.
And while we're talking about the ETFs and indexes, so you mentioned you guys have the like top 25 index.
Yeah.
Tell us a little bit about that. So how does what kind of value do you guys see in that for investors?
Yeah. So, like I said, there's currently not anything offered in the public realm and sort of listed space that is beyond Bitcoin and Ethereum and ETFs. So the idea with this strategy is that, it's a product that will be, it's actively managed. It gets sort of exposure to the top 25 by market cap. We strip out stable, obviously. We strip out some of the wrap coins, or all of them, and there's some sort of active management around meme or what we consider potential fraud. So we do our best from a qualitative and quantitative perspective to carve those out as well. And so it provides that access along with staking yield, which, like I said, doesn't currently exist in the the wrap space at all, and certainly doesn't exist once you get past Ethereum.
Is it equally weighted or market cap weighted? Or?
It is market cap weighted. It is quarterly reweighted, and there's some rules around a coin going in or out, so we don't try to over trade the tail, for example. So there's some rules of the coin being in for a few quarters before actually adding it, or same thing and taking it out. So ultimately it looks closer to maybe 27 to 28 coins. But yeah, it is especially now super interesting to look at that tail, and investors who are trying to get that exposure that at least what we see, many of the institutional investors are barbelled in their investment approach. So they have a lot in venture, tied to blockchain and crypto, and then they have a lot in the liquid space, if they have any exposure at all. That's typically where they go. But when right now, at least in the last 6 to 9 months, they've started to kind of work their way in from both sides. So from the liquid side, yes, okay, they bought Bitcoin ETF. What's next? And this is sort of the conversation that they get into, is like, how do I get exposure to the top 25? There's projects and coins here that have AI exposure. What are they? And how do I know what the winner is? And can I just get a broad index that would help me get that exposure, so I'm getting access without over analyzing or spending too much to try to get a manager to figure it out for me? And that's what kind of this is the solution for that investor that is looking further down the risk curve beyond Bitcoin.
Yeah. I guess on that thought process, Adam, talk to us about from an investor point of view. I know we talked a lot about kind of your guys' thought process, but you've seen a lot. You've been doing this for a long time. Perception of investors and the types of investors you're having conversations about in real time. What is their feedback today in 2025, and what are they kind of telling you?
Yeah, so we started to see what I would consider reverse solicitation in the institutional space and crypto kind of kick up really significantly in September of last year. So I think there was a little bit of an element back then of, if depending on which way the election goes, we want to have an opinion about the space, forgetting about whether or not we want to invest. But that, or I guess I call it September, October of last year to today, is a very different environment than prior to that for a couple of years. Because prior to that, even for dating back to 17 and 18, in waves, there were typically in those institutions that are investing, there'd be one or maybe two people inside of the organization that were crypto cheerleaders, and they would just be like, "Yes, this is the best thing, and we need to be involved. We need to invest." And they're either younger or they're sort of mid or sort of middle of the organization, looking up and saying, "Hey," knocking on the ceiling, like, "We need to focus on this." And the CEOs or CIOs of those big organizations and institutions were just sort of like, "Thank you, we're not doing anything." And so we would interact and we'd have conversations with a lot of those folks who were, very passionate and understanding what we were doing, and some of them super sharp and asking good questions, but could never really get it across the finish line because from the top down just wasn't happening. And I think what had changed is in the fall of last year, the top was actually saying, the CIOs, the boards, the CEOs of these big organizations, institutional investors that are like, "Yeah, we must have an opinion. We need to have an idea of what's happening to have an opinion. So go do the research." So it came from the top down being like, okay, it's time to spend energy and money and really time to get a sense of what these active managers are doing, what's available in passive. Go down the custody route. Is there actual custody here that can fit our risk parameters? And doing that work has come from that direction, and it's been real. It's been good conversations that have been from, at least from our perspective, institutional investors that have very large balance sheets. I was in, I've been traveling around, I'll be in Canada next week, and traveling around the U.S. I was in the Middle East. There's a lot of bigger institutional investors that are taking the process seriously and looking at active management as the next kind of step into the space, which is I think why we're getting a lot of attention, just at least from the strategies that we have, seem to fit.
Yeah. Is there still a big educational aspect with these folks?
So it depends. So when we're talking to the institutions that have had that cheerleader in the organization for 5 years, then the education actually is more about what to do and how to do it, rather than like, can you help me understand function,
What is Bitcoin?
what's going on? Yeah. And so, when it's like an institution that we're, close with and understand and familiar with, but they've never touched crypto and they're starting to, then it becomes very much a education on risk. From our perspective, we like to start with risk. Where the risk sits? Is it operational? Is it price? Is there custody concerns? How do we access the markets? All of those things is what we typically talk about. We don't even talk about strategy. There's not even like a conversation, do you like market neutral or long only? It's just like, here's how we think about risk. Here's how we underwrite it. And this is our process for each step. And then, we start to get into what might be a fit for them from a risk return perspective.
Very cool. So we talked lightly on the ADRs, so American Depository Receipts.
Yeah.
Maybe just start by telling us what is an ADR.
So American Depository Receipt is in most cases it's the listed stock. It's a security, but it can also be in OTC markets. And the stock is a receipt for a common share. And when I first started in 2005, I was mentioning the Japanese version. So it's a common share of a local company outside of the United States. So for an investor that's sitting in the U.S., if they want to, an investor wants to buy a share in Sony, instead of buying the shares that sit in Japan, they actually are buying the American Depository Receipt, which is a receipt for the share in Japan, and it's FX'd from yen to dollar. So they're receiving a U.S. dollar listed stock that can sit in the brokerage account.
What are the advantages and disadvantages of this?
Yeah, so the advantage is, I think, for a American investor looking for exposure outside of the U.S. is it is a listed form of exposures to those non-U.S. companies that can settle in their brokerage account without that FX issue. They should they want it, they can provide some kind of leverage from their broker. And it just looks like a stock, the same that Apple would look like, or Amazon. I would say, like, today's world is not nearly as challenging for the investor as it was back in 2004. But today's world, there's still some, call it, there's a price difference. There's still an underlying difference between Sony here in the US and Sony in Japan. But right now, the markets are so efficient because of the automation, right? It's not somebody picking up the phone, talking to the floor anymore. It is a computer literally making sure it's as close to fair value as possible. And there's computers fighting about what fair value is as close as possible. So the inefficiencies are traded away at this point. From my perspective, there's some that still exist, but that would be one. There's not the same rights from a depository receipt as the common shareholder in corporate action space, or sometimes dividends. But those are, I would consider, generally minor for the long-term investor. Definitely minor. So.
And then who's using these, and kind of like who could participate in ADRs, and is there a liquid market for them as well?
Just for common stock or the crypto versions that we're talking about?
Either, you could take it either way.
Yeah. So generally for the common stock, or rather the receipts for the common stock in the US are generally liquid. Obviously, it depends on the company, how big it is, how much attention it gets in the United States. So like Nintendo might be different than Sony, which might be different than Toyota Motors, just using the Japanese ADRs as examples. In the crypto space, it's actually a brand new phenomenon in that space. And the receipts that are currently issued are actually 144A products. So I don't know how familiar with that as a structure, but it's a qualified investment purchaser that has to actually, a buyer that has to be involved. So a retail can't actually be involved with it yet. And I think that's just a legacy called regulatory approval that they were able to get, so long as institutions were the only ones that could buy it. And so I think that'll just kind of progress over time, depending on how the current SEC views these products. But at the moment, that is a receipt that looks similar to the depository receipt that we talked about in ADR. It holds Bitcoin as the underlier, or Ethereum as the underlier, or Solana as the underlier. And one potential, I would say, benefit is, should these continue to progress. Right now, there's only Bitcoin and Ethereum ETFs in the US. I think the depository receipts can go to almost any coin. Because they're FINRA approved, they're SEC approved. I think there's just a taker question in how far they can go. So that's a demand side of the equation for them, rather than getting regulatory approval. That's already done. But yeah, there are restrictions. There's liquidity restrictions in those products. They haven't even really started to trade yet at all.
Okay.
So it's brand new. Yeah.
So how are tell us about like which fund you guys are using these, and kind of what are some of the strategies that you guys are thinking about as you look at ADRs? Yeah,
so for the DRs in the equity space, that's in our flagship product, which we're, like I said, I've been doing for many years. I've been trading DRs, for 20 plus years. So
so done your time.
Yeah, that's still going on. And the crypto space is brand new. Like I said, they haven't even, I don't think, started to trade yet. And we're just starting to look at it. But it is one of those things, like I said before, we had the question around, the market neutral strategies. Do alpha generation still exist? Like, this is the same trade that I was doing 20 years ago in a brand new market. So yeah, they still come back around, and it's wild to think that it's been that long for me. But yeah, it's happening, and we're continuing to look at these new ideas.
Yeah, that's really interesting. Yeah, the chassis is the same. The model of the car is different going forward, but yeah.
Yeah, totally. Yeah, that would be great. Yeah, it looks like an oil and gas engine, but it's actually electric.
Right.
Right. Can't tell. It's a G-Wagon, but it's got a battery in it.
That's right.
So.
Absolutely. That's really cool.
What are your thoughts on just like the current market price action? We're early May right now. What are you guys seeing out there? Kind of excited right now? It's been they've been pretty dead, but they're starting to move. What are you guys seeing out there?
Yeah, so the price action is super interesting, because there were a few days in Q1 when the equity market sold off pretty significantly. And there were a few days in there where the price of, even some of the alts, but really Bitcoin and Ethereum didn't move, or they were actually up on big down days in the equity market. So there was some dispersion there. And it wasn't, I don't think, obviously the crypto market corrected eventually for a period of time. But for me, is kind of putting my trader hat on, when we would see really bad news in a space, or, let's just say Bitcoin in this example, where macro looks nasty, so tariff talk looks nasty, trade wars don't look great for that space, or just generally in risk on, and Bitcoin's flat. And so when that, even again, not sort of across the board, but just on specific days, or 2 or 3 or even 4 days there, where like Bitcoin's flat or up small when the equity market's down 4% in the S&P. And for me, putting my trader hat on, I was like, that's bullish. There's not panic in that space. And when we did see panic, we've been trading crypto for a long time. There wasn't auto liquidations like we've seen in the past, meaning there wasn't a ton of leverage in the space that was just still needing to come out. We would see big moves down, leverage would get unwound, and that was it. There were no like, oh, wow, we have another 30 days of leverage still needed coming out. It was just like coming out in a day or two, and then done. So it's pretty, for me, that's like a healthy signal in sort of a cycle, and I'm not calling a bottom there, but yeah, certainly we're after seeing that after a few days, like pretty comfortable with the space, and and I felt like it was just from a trader's perspective a bullish signal. So when you kind of look further out from there, we like to look at the Fed. Many people, I think, in the space like to see what interest rates are doing. Of course, in DC, but forgetting about DC for a second, just the markets. And for me, I think that the market isn't pricing in many rate cuts or any rate cuts at all. And we're now crossing 100,000 in Bitcoin. And so imagine if the market all of a sudden starts to price in a rate cut or two, then I would, again, we're in a sort of rate environment where we're sitting in. It's not pricing in any rate cut, maybe a little bit, but not anything significant. And imagine if that starts to happen. I'm not saying I want that, because that would probably mean a recession or some sort of nasty signals in data. But just from a market perspective, pricing, that would be pretty bullish. And we just crossed 100,000 without it. So it's just it's seemingly feeling from a trader's perspective, pretty neutral to bullish at the moment. Kind of given what we just kind of see in price action.
Is there any tokens or like sectors that excite you right now?
So I will caveat that I and our group here are not sort of long short specialists to pick out names. Certainly the attention that we've seen from investors has been the crossover with AI in some format. So whether it's blockchain technology that AI is using, or whether or not the project is specifically targeting AI infrastructure to help make it either more efficient or produce a product that called mainstream will use. That has definitely been a interesting space, because for a couple of years it was like AI was dominating the narrative, so to speak, in investing land, and blockchain was dead or crypto was dead. And now the world are starting to collide. And what I find the most fascinating is at least the projects that I've seen that I think are really interesting is people don't even know blockchain's being used. So it is the AI technology that is using blockchain in a very significant way, but don't even mention it. It's almost like it's white labeled as their infrastructure. So that's cool to me. It kind of reminds me of, I don't know if you remember the Starbucks reward system that used blockchain. This is like years ago. And they didn't even mention blockchain at all. They were just like, we have a new reward system that you can get on your phone, which is really it was a wallet. It kind of reminds me of the kind of copy and paste what AI, some of the projects have been using blockchain for.
Yeah, it's interesting, kind of to your point, being in the space for a long time. Obviously, people talk about the internet, and obviously at this point, people we're talking about what browser you had. Nobody cares. It just works, right?
That's
I don't care if the underlying, what you have. It just works. I kind of go back to some interesting things you talked about: interest rates, obviously a new regulatory environment, interesting infrastructure plays with Ripple and Circle doing certain things, and that's happening too. What are your thoughts just from a obviously you mentioned the trader lens, but just maybe from a macro perspective as we move forward in this environment, which to your point, we don't know where interest rates are going to go, but it is interesting times for sure.
Yeah. So, just kind of unpacking that a little bit. The stable coins and sort of the process there is certainly been a lot of attention has been brought to the stablecoin space in the last like 6 months. I think that the real catalyst is some clarity in DC. So again, this is another sort of back of the mind type of bullish signal, is that the base case, let's say there's a bill that hits the floor in the fall that is comprehensive, and there's been, this is going to go back and forth. As many people that I talk to in the crypto space, they're like, we're going to get everything we want. I'm like, that's not how DT works. I understand where the administration is right now. It doesn't matter. It's still going to go back and forth. And so, yes, if there's a base case, there's a bill that's comprehensive. It's not just a stable coin bill, but has some market structure involved. There is some regulatory clarity around the SEC, CFTC, et cetera. All of that, if it does get there, then I do think that these institutions that are doing their due diligence now and trying to understand from the top down an opinion, they just start to move into active management and even get deeper into the space and passive too. So I think that's another. It's a big macro point in the political sphere. And
do you think these potential events are priced in?
Well, yeah, that's just what I'm saying. I think for the interest rate environment, I think that the pricing right now is that there may be a small cut and that's it. And imagine if we get something greater than that. And for I don't have a crystal ball on the politics of the United States. Yeah. I don't even actually stop trying to understand daily what might happen. And that happened in 2016. I stopped trying. So I don't have a crystal ball there. I do think that the stress or some of those sort of corrections that we see in the market are opportunities, and they're opportunities when we have those sort of bull signals as traders that pop up. So I'm not saying like the next sell-off will also be a buying opportunity. That could be something that is naturally bearish. But when there's those sell-offs and there's some stabilization and markets actually rally in bad news, those are good signals for us. And so we'll continue to kind of look at what the market is telling us rather than reading the news and hoping we can understand what might happen through the lens of the media.
For sure. What are your thoughts, obviously running a fund early on in digital assets or crypto, and then obviously the situation with debanking, banking challenges, but obviously good news, things happening, opening up. Are you feeling that way from your point of view in real time, from a banking perspective, utilizing different players in the space that you're using from a fund bank account?
Yeah, that's a great question. So early on the challenges were finding just like a cash account for funds, and I guess you guys have the background in admin, so you kind of probably touch and feel that space. And so the other maybe aspect is we're sitting in New York City in the United States, and we're SEC registered, so probably one of the hardest places to trade crypto on the planet at the moment. And so banking becomes part of that as well. So how do we actually get a cash account for one of these funds? We can use stable coins for subscription redemptions even, and sort of the investors that want to come through in and out. And so it is a practical use case. We do still believe the ice will start to melt on the banking side over time. And even we've seen some of the bigger players that will provide even cash accounts, and even there's players like Cantor and obviously some of the banks here in the U.S. that have started to provide services to hedge fund managers that some of the others may not have, and certainly historically have not have. But that's recent. That's in the last 3 to 6 months. And so certainly the landscape's changed in the banking world, and I think it'll just continue to warm up to the space.
You guys have so many different like types of funds, so I gotta ask a little bit about like the VC side of things.
Sure.
What are you seeing there? Any particular like sectors, things like that you guys are looking at, or kind of give us your guys' approach to the venture capital side of the business?
Yeah, so we, from a high level, like to be involved from a strategic perspective. So when we're looking at projects or different companies, we want to be able to provide some value and not just a check. And so the lens, obviously, we're coming through is in investment management, and what we think we can add value or edge to is the services that are provided to either managers or other financial services companies in the space. So it is a kind of natural fit for us. We're looking for a crossover between TradFi and crypto, for lack of a better term, and in general, we're looking for real world applications of blockchain or at least financial services within the crypto space, not just like hype on a specific project. So that's the lens that we look through, and we've done a few investments in the space based on that kind of thesis. And to your point earlier, we're looking at regulatory innovation. So what could be unlocked in a specific bill or country even, and is there sort of regulatory arbitrage, so to speak, in any kind of investment with that. So yeah, we tend to look at it in that space, and there is a lot going on right now in the U.S. there, and we have a huge pipeline, and so yeah, it's more just understanding what's available. How can we weed that out? Kick out.
Are investors excited about it? Like, do investors, are they calling you, hey, I want to invest in more early stage companies?
Yeah, so it's interesting. We do get a lot of calls to try to better understand what exactly we're doing, and at least what I find the most interesting from those calls is we're not trafficking in the ICOs and sort of early stage coin investing. There are a lot of VC firms and a lot of long only firms that do that, and they're great at it. It's just not what we do. It's not an edge for us. And so the conversations are first like, do you do this? And I'll say no, but here's some friends of mine that, if you're interested, like trust but verify. I think they're pretty good at it. And then here's what we do. And then when that kind of uncovers, they're like, oh, okay, that's more like a traditional venture firm into blockchain and crypto. And like, yes, that we're coming from a TradFi lens. This is what we're doing. So that, at least the feedback I've heard is like, that's pretty unique. There's not a lot of people doing that type of investing. There can be some in big venture firms that are like, kind of isolated in their little fund. But just to kind of only isolate and focus on that is unique and different.
Very cool.
Cool. Adam, as we start to wrap up here, what type of advice would you give to somebody that's looking to start a new fund today?
Advice for somebody, like my first thought is like, don't do it.
Yeah.
Well, it's
a lot of headwinds.
Well, it feels like starting a bank from scratch right now because there's so many regulatory hurdles, and there's a decision to be made in the crypto space, specifically in fund management, to be SEC registered or to not. And I think what's wild about that is right now the edge is to not be registered, because as an investor, if I'm not registered, I can access offshore exchanges. I don't have to worry about the custody rule, which is a rule that we follow and we abide by on a pretty conservative level. But somebody who is not registered, so if I were to decide to, the threshold is 150 million of AUM, which we're well above. But if we're below that, if I were to start, it would start $149 million if I could choose it, and not be registered. And then I have access to basically all global markets in the crypto space. Which, just kind of sitting where I'm sitting is backwards to me. So like, why would I, have sort of broader access to exchanges in an unregistered way? That seems backwards. So, that would be maybe one way to do it, is like, then you're not really setting up as a bank, a crypto bank. You're setting up in a sort of unregistered version of it to get the broader access. But it's a challenge. I mean, I've found that it takes twice as long and costs twice as much to do anything. And so, if you're starting something, just make sure you have the time and budget
And don't register.
And yeah, I mean, that might change, who knows, and by the summer or fall that custody rule gets adjusted or tweaked for crypto. But
What have been your biggest challenges?
yeah, it's a good question. I think right now, it's a good problem to have, because there's so much opportunity for active management that there's and we're a small team. There's like a pipeline challenge. So like if we wanted to distribute even more than we're already, we just wouldn't have the time and sort of manpower to do it, or person power to do it. And so yeah, what we actually have been doing is talking to distribution partners to help us, because there's just so much demand for what we do coming from the TradFi space, applying that lens in an SEC registered investment advisor sitting in New York with risk management as the sort of core function for how we approach the space. And so, the challenge is, how do we scale, and how do we scale in a way that is thoughtful and and just kind of mindful of the investor base, and making sure we're producing the returns that we can for them.
Yeah. Where does the name Hunting Hill come from?
It's where I grew up. So it is a street in Ohio, and actually like a small space in Ohio outside of Cleveland. That I grew up on Hunting Hill.
Very cool. Yeah.
Got it. Neighborhood or childhood street?
Yeah, small neighborhood. Yeah, we didn't get into like the childhood days, but I actually grew up on a farm in Ohio, and then when I was 12, we moved to Hunting Hill, which is just a suburb outside of Cleveland. But yeah, it's stuck with me, and I kind of threw it back to origin, so to speak, and it's a solid name. Kind of in the space. It also kind of respects the entrepreneurial aspect of looking for new things on alpha decay strategies. So we tried to kind of tie it all together.
That's awesome.
It's good.
That's
It sounds
cool
efficient.
story.
Yeah.
Cool. Awesome. Well, Adam, this has been a lot of fun. Thank you so much for joining us. Where could people go to connect with you and learn more about Hunting Hill?
Yeah, no, I appreciate the time and for having me on. It's been enjoyable, and the easiest way is just to reach out to our investor relations team at ir@huntinghill.com. And you can find us on the website, which we are rebranding. So that will change soon. But yeah, that contact is the easiest one. So yeah, thanks again, guys. Really fun. And look forward to catching up potentially in Toronto.
Yeah, well, we'll see you next week. And yeah, again, thanks again, Adam. And we'll make sure to include all that in the show notes as well. This has been awesome.